We're here with Jeff Lavine today. Jeff leads our AML and sanctions practice here at PwC. He's been in the business for over 20 years, worked with some of our largest clients in the United States and globally, and also worked with many of the regulators in this space. So welcome, Jeff.
Thank you, Sean.
Can you talk to us today a little bit about what clients are concerned about in AML and sanctions?
They're really concerned about three things. One is making sure that for all of the investment that they've made in their anti-money laundering processes and technologies over the past 10 to 15 years, that they're really getting value from it. That is, that they've done a lot, and have they really made a dent in the amount of financial crime that is transacted through their financial institutions? Second, they're looking at cost. The costs of operating an anti-money laundering program have escalated dramatically at large financial institutions and small financial institutions alike. There are some large financial institutions that are spending $1 billion a year on anti-money laundering compliance. And then thirdly, they're taking a look at their sanctions program, and they're critically evaluating, as the sanctions laws and regulations have shifted, have their sanctions programs kept up in a level of sophistication, and are their teams able to come to grips to match what's happened in this new changing sanctions landscape? So those three things are the most critical.
Let's talk about it from a regulatory perspective, and whether you think the environment has actually changed as far as the regulators being more active in the space, and then link that to sort of technology and how technology has changed during your career in AML.
Well, the regulators have been active in this area since the late 90s. I really saw it was sort of late 90s, in the beginning of 2000. I saw a dramatic increase in the level of anti-money laundering and sanctions concern on the part of regulators. It has continued to increase over time. Moreover, I think the sanctions changes and technology changes have caused those bank examiners to need to get more sophisticated understandings in these areas.
Let's talk a little bit about the convergence of how you see sort of AML, fraud, anti-bribery, anti-corruption, and cyber. Do you see that sort of coalescing or converging in this space, and what do you think will happen in the future?
I do, and I'm seeing the beginning, at least from the anti-money laundering and fraud perspective, for that to happen again. There was a time in the sort of mid-2000s, that 2005 to 2008 time period, where institutions were beginning to merge some of their fraud and anti-money laundering. Then there were upticks in mortgage fraud. There was a large uptick in AML fines and penalties, as well as sanctions, fines, and penalties. And it kind of dropped off. Institutions said, you know what, let's focus on our fraud problems here, we'll focus on our AML problems there, and we'll worry about combining them at another time. Now that institutions are looking at efficiencies, both in terms of people, process, and technology, they're once again looking at AML and fraud and saying, looks like people doing very similar things.
So Jeff, you've raised some great points today, and some of the key takeaways. First, really technology is going to be a key influencer as we kind of move forward in this space. The other point being that AML, fraud, and cyber, really we see this convergence coming together. How do we leverage technology and bring that all together to really bring a cost-effective, efficient, and top-notch program to our clients?